big question on everyone's minds is what the heck just happened to the crypto markets, man? It's one of those days you wake up, you refresh your app, and you go, oh my gosh, what just happened? Run over to Twitter, X, the X app, and find out what the heck is going on. Well, a lot is going on, and I want to start off by taking a quick look at some of the charts today. So, first, the Bitcoin USD chart. Let's dive into that first. So, this sell off today did a few very interesting things. First, it broke the larger uptrend that we've actually seen Bitcoin be in for quite a while now. So this is the uptrend that really started back at the start of January. We saw, of course, our first point of that, the first higher low coming in on the 11th, 12th of March, bouncing higher from there. Our second one coming in around the 15th of June. Now we've actually lost that line, unfortunately. What's interesting now, though, is that this sell-off, well, pretty dramatic today. I mean, that daily candle was, one for the record books, perhaps. It's one of those savage daily candles that makes you go, holy cow, why do I invest in crypto, man? That daily candle today came all the way down to around $25,200. That's where it hit on most exchanges. Some exchanges did see it actually go lower. Some of the leverage trading exchanges, for example, because of the liquidation cascades that started happening, actually pushed under $25,000. But most of the big spot exchanges, we saw Bitcoin go down to around $25,200 or $25,300. Now, this is a key area for Bitcoin. So in spite of that uptrend break, the one positive thing that we can say at the moment is that we did see a bounce. How long that holds for remains to be seen. But we did see a bounce here from that previous key area of price support back on June 15th. Of course, there's also a key area of price resistance back in February. And of course, it's a very key area for Bitcoin overall. We can go even further back in history and find areas of time when that has been a very important area of price for Bitcoin. So that's nice to see, I think, in the short term. Two things I don't love, though, is the loss of the 200-day moving average and the 200-day exponential moving average. Actually, we're interestingly basically lined up perfectly together, which you don't see super often, but they were lined up perfectly there. And the lack of volatility basically brought them together, and we lost both of them at the same time. Ideally, we want to see a quick recovery back above those key moving averages. That's really like the key lines, bull bear lines, right? So I talk about a lot. The 200-day moving average is the bull bear line. 200-day EMA is kind of more of a reactive bull bear line. It tends to give us an earlier warning signal, but now it has not because it's basically moving right along with the 200-day simple moving average. If you look down here at the RSI oversold on the daily. We got all the way down to 21. Now, historically, these kinds of strong oversold readings on the RSI tend to be days where it's a buying opportunity. Of course, that's not financial advice. Can't tell you what to do with your money, but that's what we see historically, right? Last time we had an oversold reading this bad was around the FTX collapse. Before that was mid-June 2022, around the Three Arrows Capital, Celsius, everything imploding collapse. Before that was back in January 2022. So these kinds of readings, it's not definitive, it's just one indicator of the RSI, right? But when we see these kinds of strong oversold conditions on the RSI, historically has been a pretty good time to add to your stack. Just saying, guys, just saying. Also, if you zoom into the 4-hour here, you also see another strong oversold signal. In fact, this last time that we had this was all the way back in March. So it's been a while since we've seen this kind of a strong oversold signal on the 4-hour charts. Definitely on the daily, though, I think is much more important. So nice to see a bounce of 25K for now. Let's see what happens as we move into the weekend. And we have people generally less interested in markets at the weekend. Volumes tend to be a bit weaker at the weekend. And we've had such a brutal, Friday here for those of us just waking up to the new day. Of course, U.S. markets still have to go through their Friday and unwind all of the trauma that's currently going on in markets. Of course, crypto plays 24 hours a day. Stock markets can still be factoring in a bit of all this stuff tomorrow, whether they look for a bounce or not will, I think, determine how we see the price play out over the weekend. Byzantine General here pointing out that this has been one of the biggest liquidation days we've seen in a long time for markets. In fact, this is the biggest liquidation day since the FTX blowup. Huge day, huge day. I think in total, this was not finished at the time that he posted this. In total, I think we saw almost $1 billion in liquidations today. Yo, guys, play it safe out there. Play it safe out there. Leverage is a tool, but you got to use it as a tool. Don't use it as a hey, let's just YOLO my life savings into something here and hope for the best. Low leverage probably wouldn't have even got liquidated on today. If you'd been on a 2 or 3x leverage position from 30K, you probably didn't even get liquidated on this move. So low leverage can save you and still help you maximize gains later on. Anyway, that's pretty crazy. Now what this does though, that has probably flushed the majority of leverage out of the system. And this is why we see price moves happen so fast in crypto, because $1 billion worth of leverage starting to deleverage starts happening within seconds and minutes. And we start a cascade that moves prices down very fast in a very dramatic way. And of course, it's September. It's September. And I know, actually it's not September yet, but I mean, it's August, which is generally not the best month, but September's coming up. That's the key thing here. This time in the markets tends to be a boringish time often anyway. You can see the average return by month here. So I'll read this out for you. January, 9.74%, February, 12.5%, March, 9.9%, April, 33.79%. Shout out to April, good month to be a trader. May 17.8, June 7.6, July 7.6, August 0.69, September minus 4.67, the only month for Bitcoin consistently in the red most of the time. October 25%, November 35%, December 10%. So what that means is that often we see August being pretty boring months. I mean, it makes sense. Northern Hemisphere summer, everyone's on holiday, everyone's having a good time. They're not looking at the charts. They're not trading Bitcoin. They're not buying Bitcoin. Everyone's on holiday. It kind of makes sense. September, people are still having late holidays. People are just coming back. They're getting back in the groove of work, all that stuff. The first thing on their mind is, I need to YOLO into some Bitcoin. So Septembers tend to be pretty rocky months. We're not even at September yet. Maybe this is already our pre-September warm-up here. But August tends to be a quiet month. September tends to be a red month. So the question I know a lot of people want to know the answer to is, well, okay, if September's a red month, then how much lower are we going to go? Look, nobody knows the answer for sure, right? But 25K so far, we've seen a bounce there. Obviously, we want to see that actually holding up strong, but we have lost key moving averages. The next major area of price support, though, is pretty far down at 20 grand. So that you really want to see hold. If we lose 20K, yo, what up? That's not going to be cool. That is not going to be cool. We start talking then about, retesting the lows. And to be clear, that happened in the last cycle. Guys. We had our lows come in December 2018. We retested those lows in the COVID crash, very closely coming to a new low, but not quite. Of course, that was on a massive liquidation cascade once again. But with a lot of leverage out of the system, it'll be harder to move lower. Of course, leverage will reload. People will bring the leverage back in. We'll get new leverage added. Creates a new problem. But right now, without a lot of extra leverage, it's hard to push things lower dramatically. A lot of the people who've been holding their Bitcoin for a long time now, I mean, is this going to shake you? Is this the thing that shakes you finally? Probably not. Now, why are people freaking out right now? Well, there's a few different reasons in the market why people are losing their minds and selling their Bitcoin and getting liquidated. Story that's been floating around is that SpaceX, Elon Musk's one of his companies, sold $373 million worth of Bitcoin. This is from a Wall Street Journal report. A lot of people didn't even know that SpaceX had Bitcoin until today. I think we covered this year and a half, 2 years ago or something like that. Tesla's, of course, the one that really got the big attention because Tesla's a publicly traded company. SpaceX is a privately traded company. So it's a bit of a difference there. But the report by the Wall Street Journal, as Watcher Guru points out here, is unclear and states SpaceX wrote down the value of Bitcoin it owns by a total of $373 million last year, and in 2021 has sold the cryptocurrency. So it's a bit of one of those stories that starts people panicking. I mean, you have to keep in mind, if this sale did happen, then it happened a while ago. It's just being re-reported now by the media, or being reported by the media now. It's a big nothing burger. It really doesn't matter. It's not a massively consequential amount of Bitcoin. It doesn't matter if SpaceX holds Bitcoin or not. It really doesn't. And if you're selling your Bitcoin because SpaceX sold their Bitcoin, seek help. I don't know, man. I don't know. It's like, that's not a reason to sell your Bitcoin, in my opinion, of course. That's not why I wouldn't sell a Bitcoin because SpaceX sold their Bitcoin. I'm sure somebody has. The big thing, though, it's really spooking markets, obviously, is the Evergrande story. And there's a few other factors here we're going to discuss too, but China's Evergrande seeks Chapter 15 protection in Manhattan bankruptcy court. Evergrande finally went bankrupt. Now, we have been talking about the Evergrande story for quite a long time here. It's been going on for, 2 years now? Evergrande is a massive Chinese property developer that has basically been on the ropes for a very, very long time. China's Evergrande, which is the world's most heavily indebted property developer, became a poster child for China's property crisis. Yeah. They've been the sick man of China for a while now. Seeing them collapse is actually probably a good thing in the long run. Pull that Band-Aid off. Now no one has to worry about Evergrande collapsing. And look, I think there's been already a lot of deleveraging away from Evergrande. A lot of funds have got money out. The Chinese government stepped in to probably mitigate the eventual collapse's impacts as much as possible. Still, these are the kind of headlines that spook markets. These are the kind of headlines that freak markets out. Oh my gosh, a massive Chinese property developer has collapsed. The end of China is here. Can't wait. We're going to all start making those videos pretty soon, guys. The end of China is here. 24 days until China collapses. Evergrande, the new Lehman Brothers. You guys know the headlines. Done, though. And that, I think, is a big factor. It spooked the markets today. So, in the end, I think not that massive of a deal. Yeah, it's a massive Chinese property developer. Yes, the Chinese property market's got a lot of problems, obviously. But it's done now. Markets can consume that information and move on. Also, of course, this hasn't been helping us because look, the last 2 months for Bitcoin have been super boring. Nothing's been happening. We've been super low volatility. And as I've been saying, with this low volatility and the Bollinger Bands being super low, it indicates that a big move was coming. A big move did come. And like I was saying, it doesn't indicate up or down. It just indicates that we're in a period of super low volatility. In fact, we were at historically low volatility before this happened. Well, we got the volatility. Bitcoin's not boring anymore. It's just not the volatility we wanted. And it was tough, because we had all this good news coming, essentially some good news coming through, and it didn't really push markets higher. And when good news isn't pushing markets higher, it's kind of a time to take stock and say, that's not awesome, is it? Of course, these kind of sell-offs do provide buying opportunities for the savvy investor. So let me know in the comment section, of course, have you been buying the dip today? Curious to hear your thoughts. And if you have been pulling the trigger on any buys, and if so, what have you been buying? Now, as expected, we also got the delay from the SEC on the Bitcoin ETF. This was the ARK Invest Bitcoin ETF. Everybody was basically expecting that, yeah, this is going to be delayed. So there was not really any big surprises here. The next big thing we're looking at are the next deadlines. the next deadlines for ETF products. So coming up September 1st, 2nd, and 4th, we have a whole slew of Bitcoin ETFs, including BlackRock's Bitcoin ETF, Fidelity's Bitcoin ETF, Bitwise's Bitcoin ETF, Invesco's Bitcoin ETF. All of these guys are coming up for, well, their first deadline. And I don't imagine much is going to change in the 2 weeks between ARK and BlackRock, unless, of course, it's simply the case that the SEC wants to approve BlackRock first. Then they might delay them. But I expect probably we're going to see a pushback second, third, or even to the final deadline. The SEC may drag their feet as long as possible, unless, of course, they lose the grayscale lawsuit, at which point their hand might be forced to start approving these Bitcoin ETF products. We'll see how that goes. And of course, I like that Bitcoin Archive points out here the hypocrisy of the SEC. They approved a Bitcoin futures ETF. They approved Bitcoin leveraged ETFs. They approved Bitcoin short ETFs. And the pricing data that is sourced from Coinbase and other major exchanges, by the way, is adequate for all of that. But it is inadequate for a spot Bitcoin ETF. There's too much manipulation and fraud in the cryptocurrency industry with the price of Bitcoin to approve a spot Bitcoin ETF, but there's not too much of that to approve a futures, leveraged, and short ETF. Does it make any sense to anybody? No, of course it doesn't. Of course it doesn't. By the way, if you are a trader, you need yourself an account over on BYBIT. It is the best place for trading cryptos. Whether you want to do futures trading, use low leverage, of course, or if you want to do spot market trading on their wildly popular spot altcoin markets, or you want to do copy trading, outsource trading to somebody else, you can do that on BYBIT. Use the link down below. You'll get exclusive fee discounts as well as exclusive trading bonuses and deposit bonuses up to $30,000. So check it out if you are a trader. Now, what are some other things freaking the markets out right now? Well, bonds are flashing a warning sign. The bond markets are going a bit nuts right now, especially if the Fed raises interest rates more. So this is a real situation right now. It's got the global markets freaking out a bit because the Japanese bond market is heading up. The Japanese yen's heading up. The Japanese central bank might do a big sell-off of U.S. treasuries. U.S. bond markets are seeing their yields rise too fast. It's freaking markets out, man. Long story short, this is the kind of, and bond market's massive market. It was $150 trillion global market. As Michael Gayad points out here, here's the 10-year treasury yield in 1987. Got up over 10%. It peaked on October 16th, 1987. Black Monday, when the stock market fell 22% in a single day, was October 19th. Spiking yields led to a stock market crash. Spiking yields essentially equal a bond market crash. So the bond market definitely causing a lot of concern right now. And it's adding to the fear, adding to the buffet of fear that we have to dine on right now in markets. Everything which is affecting the crypto markets. The Fed minutes from their meeting came out also. So Fed officials are divided in July over the need for more rate hikes. Participants remained resolute in their commitment to bring inflation down to the 2% objective. The minutes said of a meeting in which policymakers on the Federal Open Market Committee unanimously agreed to raise the benchmark overnight to up 0.25%. Most participants continued to see significant upside risks to inflation, which could require further tightening of monetary policy. Let me read between the lines here for you. They may raise longer than expected, higher than expected. At least that's what they're telegraphing now. And it could be psyops from the Fed. They've already stated they're probably going to raise one more time. Another 0.25% raise is on the table, especially with inflation going from 3 to 3.2% this month. So let's not get excited if that happens, but the markets will not like that because this just creates all kinds of chaos once again for the bond markets, for the equity markets. Hold on to your butts. And of course, U.S. stock markets are slipping after Fed minutes show officials split over the rate hike. So stock markets are freaking out over this to an extent. And of course, we don't rally to new all-time highs like Apple or Nvidia or other stocks did. We did see some nice moves in crypto and some nice on-chain gains, obviously. But here you go. You see US stocks got some new highs this year. Crypto not even close. We didn't follow them all the way up, but we are going to follow them down. We're correlating again, baby. Yeah. This is not the correlation you were looking for, man. Ay, 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 ay. As the rational root points out, we are now in a reaccumulation mode for Bitcoin. All of this sounds pretty dramatic until you realize that actually we're just kind of in a reaccumulation mode, which is cool, but that reaccumulation mode can last a while, and there can be a lot of price variation in a reaccumulation period. So just, moderate your expectations on what crypto is going to do before the Bitcoin halving. Rect Capital here pointing out as well, let's not forget that we are in a new macro uptrend. Yes, there'll be corrections, but over time, the macro uptrend will take BTC to a new all-time high. To put it in perspective, we've dropped from 30K down to 25K. It's a bit dramatic. It's not that crazy for crypto. I think it's probably feeling even more dramatic because nothing's happened for like the last 2 months. And I know there's a big, scary macro backdrop going on here. I get that. I'm very in tune with the reality of what is going on here in the background. I know it's been crazy, guys. I know crypto is a market that continually challenges you. This shit ain't easy. Don't let anybody tell you this is easy. It's tough in crypto. It's tough in any market. Investing's hard because it continually psychologically challenges you. But I remain focused on the big picture, on where we are going in the long term. This day-to-day noise, what's going to happen by the end of the year, it's not super concerning for me. I'm thinking, what's going to happen in 2024, 2025, 2026, heck, by 2030? 2030. It's a long time away, but it's actually not that far away. Where can your portfolio be? Where can your wealth be by 2030? If you're paying attention, if you're dialed in, if you're making the right decisions, thinking long term, not getting shaken out by all the fear in the markets, deploying capital when necessary, obviously, when the fear is high. Those are the people that tend to make it long term.